button if you guys are excited. Guess what? I made the joke this morning. T-Shroom told me not to say it, but I'm going to say it anyway. Beamer's not running away today because Bitcoin is on a freaking tear. Speaking of T-Shroom, how are you doing this morning, my friend?
Tim, I'm doing better than I deserve. Going to be honest with you. Way better than I deserve, especially my portfolio. So doing great. And let's go ahead and get into the quote of the day, guys. Today, it is a doozy. If you go over to my screen, you can see here it says, quote, "I believe that banking institutions are more dangerous to our liberties than standing armies. If the American people ever allow private banks to control the issue of their currency, first by inflation, then by deflation, the banks and corporations that will grow up around the banks will deprive the people of all property until their children wake up homeless on the continent their fathers conquered." Thomas Jefferson, 1802. Are we seeing that today,
guy should
Tim?
run for president.
Yeah.
At some point in his life.
Yeah. Is it true, Piper? I want to hear what you have to say.
By the way, welcome Army Piper from Texas.
Hey, what's up, guys? How you doing? Yeah, I think it is true. Absolutely. I think that's a fantastic quote. And, the banking institutions, they are dangerous to the liberties. Financial freedom is a thing, and they are definitely showing that they are the enemy of that right now. So.
Absolutely, man. It is this is gonna be such a great show to go through all of these things. I do know though, because we have T-Shroom back, and yesterday was different because we brought in Caleb Franzen. Obviously had to have him on the show, break down that banking information. However, with T-Shroom back, resumes the run of the Tease Shroom. And so Tease Shroom, you wanted to tease something this morning for our audience, didn't you?
I did. Not. I would never tease our audience or anybody. Teasing is beneath me. But what I will say is that we'll be getting to some stories later into the show. And also we'll be getting into some pictures from my cruise and my vacation that I went on, two of which I will share before we leave this non-tease segment. So the stories that we'll be covering, though, is Senator Warren calls for Powell's recusal from Fed Bank's failure investigation. A judge will likely rule in favor of Grayscale and Bitcoin spot ETF battle with SEC, says Bloomberg expert. And also we'll be getting into some of the details here and trying to zoom out also on the larger narrative here with this whole banking crisis that is going on. So let's get into some of the fun photos from the trip that I went on. Well, the first one is going to be this one right here. This is me on a cruise ship, ready to feast on meal number 7 of the day. And it was only noon at that point. It was basically a 24-hour buffet there on Royal Caribbean, brilliance of the sea. And I had a ton of fun. And so did Amanda.
Is that an Emerald Data hat?
It is an Emerald Data hat. A very inside joke between Tim and I that we'll talk about later. But yeah, so essentially that's it. That's all I'm going to show today. Or that's all I'm going to show right now in this non-tease section we will get to more later in the show.
Yeah, if you want to see more T-Shroom tease photos, you got to get us to 100 likes before the end of the show. I want to transition here. We're about to go in. I'm going to have Army Piper do the kind of macro update this morning, especially with these CPI numbers, get some of that data. But first, we never want to make the mistake of not reading the names in chat because, as we know from our past, that always ends horribly. So let's read some names. We got a new name. Well, not new. It's a name came back to the first comment of the day, and that is Yair Navarro. Congratulations, my friend. Mr. Bitcoin is also here. Crypto JMP is here saying, that's not a bad, I don't know. It's like, as a child, my mother rooted so much in me not to say cuss words.
Yeah.
I don't even think cuss words are that bad. it's like, if I say them out loud, it feels silly.
Yeah. Hey, Tim. Let's leave the therapy session for after the stream.
I just am contemplating if I want to say the word, if I want to read what he said, or if I want to alter it.
Okay. Well,
I'm gonna stick with make my mama proud this morning and say he said, "Dang,
wow,
I tried."
What a guy!
I tried a little harder there, Crypto JMP.
You got a lot of class.
You did trip me up there with the wording. Mike Play is also here this morning. Who else? Gia S is here. Josh Newman is here. Eric Wallen. Cryptex with the blue wrench in chat. Will Reynolds. Soz Majid. We got a super chat from Mr. B saying, "Do you think this is a liquidity pump or I'll buy the office coffee this week again?" So the or was actually Is he asking us something else? Do we think this is a liquidity pump? I'll ask Piper. Piper, what do you think? Do you think this is a liquidity pump or something else?
No, I think this is people are tired of sitting on their money for one and waiting to buy the dip. And so now they've gotten good data on top of good data. So there's that one. And so they're putting their money in some place and obviously probably don't want to put it in the US dollar or in a bank because, well, hey, we've seen how that plays out too. So a lot of people moving away from banking and into crypto right now. So on top of that momentum that we already had, which brought us from our local bottom we just went through, and the fact that, we got good CPI data today, markets are moving, and I don't know how high it's going to go. I think that we might be getting fairly close to a little pullback retracement here because it has to. It's unhealthy to keep moving up. But yeah, I think I don't think this is just a liquidity grab. I think that if it was a liquidity grab, we would have turned around about $1,000 ago. So.
Yeah, I think we're going to keep moving in more names here. I just wanted to read that super chat. I think it's too early to say this is for certain, but we've talked about this on this show before. The question is when, not if, do people finally wake up and realize how terrible the US dollar is, how terrible the current financial system is, and they realize that Bitcoin is an answer. I'm not saying that's what's happening right now. We have seen moments before, even since I've been involved in crypto, where Bitcoin seems to pump more than everything else. However, due to the circumstances and the timeliness of this, it's hard to argue with the fact that this is a statement by people saying we are tired of being lied to and having our money inflated and taken away from us, and Bitcoin is the solution. But let's keep moving on here. We already said Eric Wallen is here. Crypto Trades is here. Mr. J is here. Taylor Warren, my beautiful pregnant wife, who is on her spring break right now, up with her parents, so she's not here. She said she got a great snooze, ready to hear some news. Ooh,
wow,
like Dr. Seuss. She's a rhymer, all the timer. All right, we're gonna keep going on. Ninja Glock is here. A couple more. Steve Shrum, actually, because I know there's different accounts he has, and I don't want to call out the wrong account.
Indeed.
Steve Strum is here. Who else? Joe Watkins, Win People, Joe Nickel, Crypto Mini Bike, Brian Hoskins. Let's get a couple more, and then we're going to get into content. Crypto AI is here. And let's go one more. Elo Brown is also in the chat this morning. Guys, if we did not say your name, it does not mean we don't love you. It just means it's time to get on with the content. So go ahead. We got over 80 people watching right now, but only 43 likes. Smash that like button. If this is your first time here, make sure you're subscribed to the channel for crypto content. Before we jump into the TA, we didn't get to do a lot yesterday, so we're going to do more of that today, both crypto and stocks. Let's hear about some of the macro news, especially these CPI numbers. What do you got for us, Piper?
Hey, Tim. So we had the data come out this morning, and looking right here, you can see that core inflation came out 5.5%. It was previously 5.6%. The consensus on this was at 5.5, but it was forecasted to be 5.6. So we came in just below the forecast, came in just at the consensus on this for core inflation. Now, the inflation rate, though, actually came in at 6%, forecasted to be at 6.1. The consensus was 6%. But we were previously at 6.4. So we came down 0.4% on that. So inflation's coming down. That's the whole point of raising interest rates, right? And so this increases the likelihood that we are going to see 25 basis points, possibly zero. Small chance, but we're going to get into that in 1 second. What I do want to point out here, though, is that the actual CPI came in at 300.84, and it actually came in below the consensus and the forecast. Not as big as the actual inflation rates numbers, but the CPI total came in below what it was expected to be. That's what we're looking at, and watch where we're seeing this pump today is off of this data. But what I want to show you here is, and let's go ahead and bring this up. This is trueflation. Now, typically, trueflation was what everybody would refer to when they were looking at the inflation numbers that the government was putting out and going, these numbers are way off. Like, if you remember back when we were hitting that 11%, so on and so forth, people were talking about that the trueflation was saying we were at 20% plus, right? Well, our trueflation right now is actually coming in less than what the government's even reporting. So when you look at that gives me a warm fuzzy of bullishness when I look at the trueflation data. So last thing I want to show you here is going to be All right, and I want to give a little refresh here just to see it was at 84.9 just a little bit ago. Yeah, it's 81.9% chance right now of 25 basis points. We are up to 18% chance of 0 basis point hikes for federal rate hikes next Tuesday on March 22nd. So that's what we're looking at there, Tim.
Yeah, very interesting. To see the 25 base points. Don't get me wrong. I think a lot of people are going to take 25 over 50, but there's still people out there, and we'll talk more later, but there's still people out there that think not only could we see a 0% interest rate hike here. I can't remember where I saw it yesterday, but yesterday I saw an article. There's certain people predicting this is the pivot, that we will not see any more hikes later this year. I think that's a little far-fetched. I think that we will. My personal opinion is I think we will see more hikes, but it's very interesting, and we'll talk more about that at the end of the show. Let's go ahead and dive in and do some TA, though. Go ahead and go to my screen here, Piper. The first thing I'm going to point out here, if we were to, let's say the candle closes right now, this daily candle, I'm on the daily chart, we would have a nice candle formation of 3 white crows, a major bullish indicator right here that would continue to move us to the upside. We do have to look a little bit higher, and we'll look at some other things there as well. But the biggest thing of the day on the chart is breaking through this 25.2 that we struggled with. We came back here, got rejected just a couple of weeks ago, and that's kind of what I was kind of hinting at in the intro here. As much as this is bullish, and I'm going to kind of show you guys the charts and show you why I think that this rally is not quite done, it is something to celebrate, have a good time, but don't lose your mind, because this has been a roller coaster of emotion. You go back to December and January, and we're really struggling here in Bitcoin. We're really contemplating, all right, is this just another capitulation move before another dip to the downside? But then we get a massive rally kicking us up. We come all the way up here towards 24,000, get a little bit of, we retrace a little bit, kind of cool off, and then shoot back up to 25.2, which was a significant level that we set as a resistance back in August. And we talked about how significant it would be to not just break it, but start closing some candles above this level. But of course, we couldn't do it, and we came to the downside. And then we started seeing the dominoes fall in the wrong direction. We had Jerome Powell coming out extremely hawkish and telling us that we're actually going to have to raise interest rates higher than previously expected. We get the crash of Silvergate, and at the time, that was huge news. And the response that we were kind of getting from the government, from Jerome Powell, from Elizabeth Warren, from others in the field is almost like, hey, we told you crypto was a scam. You should have believed us. You shouldn't have gotten in the first place. But then the dominoes keep falling, and we get 2 of the largest bank closures we have ever had in Signature and in Silicon Valley. And now, all of a sudden, the entire narrative has flipped, and we are back bullish. So you might be wondering, Tim, what's the point of the story? The point is, do not let your pride go before your fall. It was very easy to be a bull during this whole stretch, and it was very hard to be a bear. But then over the last 2 weeks or so, I would say last 2-3 weeks, it was very easy to be a bear and very hard to be a bull. We have flipped back into bullish territory. We flipped back into where we have the bullish momentum, but make sure we do not get too full of ourselves, and we stop watching the charts, stop listening to the important data and information out there, because just because we're having a nice rally right now does not mean that this rally is permanent and we're setting new all-time highs by the end of the year. Something that someone asked me over this morning on Twitter, they reached out, they said, Tim, what is your thought about where we currently are? What do you think needs to happen to confirm some bullishness? And this is going to be a hard answer. I think that as good as it is to break through, and as good as it would be to even close today's daily chart above 25.2, in reality, I think it would be a very, very good pull to close a weekly chart above this level. This is significant because we have been setting in a bear trend. I'm actually shooting a video the other day, creating a course video for this about trends. We had been in a bearish trend ever since the high back in November, where we're just setting lower highs, lower lows. We kind of had a little bit of a wet. This is the log linear chart, so it's going to look different than some people have it drawn on linear on the log chart. Excuse me. But we had been setting lower highs, lower lows, a falling wedge pattern, but this is a bear pattern. Even if I were extended all the way over here, we were still setting lower highs back here, bear trend. The reason it was so significant, first to break 21.5, but then to break 25.2 was because these were the last 2 significant peaks in this bear trend. Now, potentially, we could resume a bullish trend, but we need to see some closes, significant closes above these levels to start setting that higher high, higher low. So, do we have some good news at the moment? Absolutely. But if you think that just because we broke through this morning that all the pain is over and that there's no way we're going any lower, we got to see the bulls start to confirm some of these levels before we can celebrate truly. Now, let's look at the fixed range volume profile here really quickly and take a look at what's happening there. We talked very heavily about the fact that if we can break through this 25.2, you can notice on the fixed range volume profile, there's almost nothing going on between us and about 28,400. That's not necessarily 100% true. There's going to be some levels in here. I'm going to pull up some other indicators in just a second. However, if the bulls can keep this momentum, it's very, very simple. It's very easy to see a $28,000, even push up closer towards $30,000 Bitcoin very soon. And if we can conquer those levels, now we're starting to talk about 33, 35,000, some price levels that we bottomed out in back here in January of 2022. This could be very big, so let's keep our eyes there. But let's look for some confluence in the markets this morning before we just declare $30,000 of victory. Let's pull up our market oracle over here on Chart Prime, and I think I got to pull up some other levels here as well, so stay with me here. I want to pull up support and resistance zones. I'm going to be here on the daily chart. I'm actually going to switch down to the 12-hourly chart, and I'm going to pull these others up. I'm going to pull up a 4-hour chart extended, and I'm also going to pull up the daily and just look at a couple different levels of support and resistance that we can keep our eyes on right now. So you guys can see over the last couple of days, last 2 or 3 days, we have just been slashing through these resistance levels, even this morning, beating out this very, very crucial, very important level right here at 25.2. And now the next one that we got to keep our eyes on is going to be here around about $27,000. This is the number 4. It's not maybe the most significant with the most touches, but it is a level of resistance that most indicators are not going to show you. Like most traditional indicators, like I just showed you with our fixed range volume profile, they're going to show you a gap right here as if nothing's happening. But if you look very closely, there is a little bit of a valley in the fixed range volume profile right there at 27,000. This is another significant zone of resistance to keep an eye on. Just because we bounce off of it, let's say we do reject at it this morning or even later today, just because we do that doesn't mean the trend is over. This is another thing that's very, very important when you're looking at charts is it doesn't matter if things go up and down and up and down. What matters is the trend. Are we setting higher highs and higher lows? And so don't be surprised if potentially what we see happen throughout the rest of the day, maybe even in today to tomorrow and next couple of days, is if we reject right here and come back down to return 25.2 back into support, whereas for the last year, it has been resistance. This would be a major, major, major bullish move if it were to happen. Let's look at some other things that Chart Prime has for us. I'm going to take down these little zones of support and resistance and pull up another one. I was looking at this morning with Piper, and I might get his take here in just a second because he has a little more experience than I do in this indicator. But the little bit of time I have, it has been absolutely phenomenal. I want to pull up our order blocks. I want to pull up our support and resistance zones. Now, this was something that last week I was looking at and saying we're about to make a really big move to the upside or a really big move to the downside, because when you come out here to the daily chart, there just wasn't a whole lot of them in this range. I'm going to go ahead and pull down my fixed range volume profile. It's doing nothing but getting in the way at this point. Give me just a second. Where are you? Where can I find you? Nope. All right, give me a second, guys. Got to go over here, find my fixed range. There we go. Get boom. All right. Let's get back over the charts. Right now, we are working at the moment. We not only slice through this support and resistance zone, we also are working to fill this order block right at that resistance level, right below 27,000. So again, could we get all the way to 27,000 at the top of this premium level? Absolutely, I think we could. But this is why we're pushing up here. We have an order block sitting up here. The next one sitting in a fat support and resistance zone is going to be all the way up towards 30,000. So this could be huge. This support and resistance zone starts at 28.9, give or take, and could run all the way up to 36. I think it's a little bit of a tall order, 36.7 actually. It's a little tall order to say we're going to completely fill this gap, but it is definitely possible. When you look below us, we just filled this support and resistance zone this morning. We finished filling, I guess we finished it late yesterday. And there's really nothing below us. You have to drop very, very far to get to an order block, all the way down towards that 18,000. That was one of the reasons why a lot of analysts are calling for 18,000, or we're calling for 18,000, was this order block popping up down here. But then our next support and resistance zone comes in all the way down here at 15,800. So at the moment, this bullish move was a godsend. There's a lot of things calling for low levels, but because we reversed and we moved to the upside, we are now filling some gaps. This is kind of filling in a lot of places that makes a lot of sense. Let's pull up our oscillator here as well in the daily chart. We are not overextended by any means here on our chart prime oscillator. In fact, we got a nice flash, a nice confirmation here on the daily chart. And I posted this on our Discord. I think I posted it somewhere else as well. Discord, maybe Twitter. But we have a lot of bullish nature that happened here just over the weekend. We bounced off our daily dynamic reactor. We had one of the coolest tools in the chart prime suite, this predictive reversal. It doesn't necessarily hit perfectly every single time, especially when it's going against a trend. But in this case, the bounce off the dynamic reactor, the predicted reversal, the candles that it identifies for you, bullish hammer and a bullish engulfing candle. We got our oversold and reversal triangle on our oscillator. This was all perfect confluence, kind of pushing us back to the upside. And as you can see on that oscillator, we still have a ways to go before we have any type of real problem. Moving down to the slower time frames, and I'm going to kind of switch over and get into some other coins as well here. We are flashing some overbought signals on the lower time frames on this oscillator, but I was talking with Piper this morning, and anyone who has chart prime or you're considering getting chart prime, something that I have noticed very, very much so, and you can add this to your tool bag, is when you're on the higher time frames, these overbought, oversold signals are very, very lethal. These reversal triangles are lethal. But when you get to the lower time frames, it's not that these are terrible, but what you want to see is a confirmation with a peak seeker, and that is the blue dots that we have. And you're going to see back here, these blue dots on the lower time frames, that's where you're getting a lot of great calls. And when you combine them and you get some confluence, like for example, not only do we have oversold, we have bullish divergence, and then we get a peak seeker, you can see right there, perfect call of the bottom. When you're looking in a downtrend, if you're in a downtrend, the other arrows, the reversal arrows, the overbought, they're sitting in good spots. But right now, do not make the mistake on lower time frames. And this goes for pretty much anything, even RSI, MACD. Just because it's flashing overbought, do not, if it's a bullish trend, and especially this explosive a bullish trend, do not be fooled by falling for those. Wait for stronger indicators. In this case on chart prime, I'm going to be waiting on the 4-hourly chart for a peak seeker, a blue dot to pop up on the top of the oscillator here. And that's when I will know it's time to reverse and not only maybe take my profits, but consider looking for a good spot to take a short position. At the moment, we do not have it. Again, going back out to these bigger time frames, we still have a lot of room to run. Don't be surprised if we hesitate at 27, but then after that, Bitcoin to 30,000 is not just a dream. It is looking very likely, especially with the CPI numbers, especially with the fact that we're looking at the FOMC more than likely at the most doing 25 basis points, if not halting interest rates altogether. This could be majorly bullish. By the way, chart prime special deal that only lasts till the 20th. So we got 6 days left. If you act for the next 6 days, you can get 50% off the lifetime access to chart prime. And that's then going away for a very long time. We don't know when it's coming back. This is your last chance to take advantage of it. Sign up with that link down below. You're going to want that. Let's keep moving on, though, and take a look at some other coins. Are we good? I saw the spinning wheel of death on YouTube. Okay, I didn't want to see if we went down. The first thing I want to kind of bring your attention to, and I'm going to pull a trick out of old T-Shroom's bag right here. Can I zoom in on this? Let me see if I can. Come on now. It's not going to let me? My Mac is not letting me zoom in. All right. Well, you guys are going to have to peer with me on this one. They can see on this right side of the screen all the way. This was very interesting to watch over the last couple of days, and we kind of hinted at this earlier, but Bitcoin is the big mover in crypto, in the stock market. Today, it is up 7%. When you come down and look at other cryptos, and I don't have every single major crypto here. The closest one to matching what Bitcoin is doing is this one right here. This is Aptos, up almost 7%, almost hanging tight with Bitcoin. But everything else, we're looking at 3% on Gala. We're looking at 5% on Solana. Good for Solana. It's popping back up. We're seeing 5% on Litecoin. Those are the other big movers. Nothing is comparing to Bitcoin at the moment. And what we are also watching happen right now on the Bitcoin dominance chart is something that I did not think we would see again, but people are proving wrong. Watch for this explosion breakout for Bitcoin dominance as we're heading back towards 50. Now, I don't know if we'll quite get there. There is some resistance above us. Right now, what I'm looking at on the chart, let me go to the weekly chart, make this a little easier, and I'll pull down my market oracle just because I want to use some traditional TA here. We're sitting in two different, one is a falling trading channel, the other is a rising trading channel. Either way, they are both calling for a little more of an increase. We might pause here just a second on the smaller one, but as you can see right now, this trading channel moving to the upside to fill a larger trading channel that we started back here in July of 2021. Watch Bitcoin potentially get back up in the realm, the region of 45 to 47% dominance. This could be huge. That's also a good sign that the bull market, the bear market is coming to a close. And when you see Bitcoin take more dominance over, that's what kind of shows you, hey, we've kind of rooted out. People are flowing back into Bitcoin. It's going to almost give the altcoins permission to start their own run and have an altcoin season. But keep your eye on the Bitcoin dominance chart as it continues to climb. This is a big deal. Let's take a look at some other ones, though. Let's look at Ethereum really quickly and see what's happening here. I'm going to take down my fixed range volume profile on that one. Let's go into the daily chart here and take a closer look. So Ethereum fell out of a falling wedge pattern here, came down, but it is now back up into it. Even though this is not going to be the cleanest one in the world, I guess, yeah, it would be invalidated, but I'm still going to watch the resistance level of that top be significant, around 1,800. In fact, when I pull up the fixed range volume profile, let's take a look at what it is saying for Ethereum as well. We're going to see some resistance start to come in where we're currently at. We're in a little bit of a dip. Watch a push. I think the region of 18.5 to about 1900 is going to be an interesting zone for Ethereum. If it can break through that, similar to Bitcoin, it's got a little bit of a gap. I'll back this up just a little bit for you guys. We'll take a larger time frame of this fixed range volume profile, but you're going to see that Ethereum has a gap. If we can break through and get above 19, we're going to start running up towards 2,100 on Ethereum before we hit a nice little valley that could be a place. You also see that little peak right there back in January 2022. Maybe we see the bears finally mount a defense against Ethereum. So keep your eyes on those levels as well. In fact, let's pull up our market oracle. Let's take down our there we go. I'm going to take down our fixed range volume profile, and let's pull up some of our resistance and support zones just to see what they are saying as well really quickly, and then we'll keep moving on here. All right, so right above us, we did just slash through a major 4-hour support level. The next one sitting here at 18.6. So that's kind of that confluence with that zone I was talking about, 18.6 to about 19. There's a level of resistance right above there. It's going to be crucial. The bulls kind of conquer that and then start moving up. The next one we're looking at with significance is around, it's up above 2,000, closer towards that 21 that we also talked about on fixed range volume profile. So we got some confirmation in there. Keep your eyes on this level, 18.6 on Ethereum. And if the bulls can keep going, we'll push on through. Let's take a look at what Cardano is doing this morning. Cardano with that nice, pretty bounce off the golden pocket here just a couple of days ago. Also, let me take that down for just a second. I talked about this the other day. I thought we were going to slash through it, but I should have trusted my TA just a little more. This had been a very significant zone of former support turned into resistance that we had turned back into support briefly. I thought we were going to fall just a little bit more through the golden pocket and come down lower, but sure enough, Cardano ended up finding support right there on the confluence of the golden pocket and this falling level of support. Let's keep an eye on a couple different levels for Cardano. Let's see what's happening here. I think Cardano just slashing through the daily dynamic reactor. We could have a decent little run on Cardano over the next little bit, coming all the way back up towards 40, if not 42, 43 cents is the next leg up for Cardano. So keep your eyes there. It is 9:30, so I do want to start the process of switching over into the stock market open. This is going to be a really big thing to follow. But first, Army Piper, anything you want to add or anything you want to speculate on that I missed here in the TA for crypto this morning?
Yeah, thanks, Tim. So I am looking at something here on Ethereum. Just so this is a 12-hour chart, and I've had this long-running Fibonacci setting on top of my predictive ranges for a while. You can see here that the golden pocket right there at 0.65 and the 618 is coming in right above the golden trade channel. But we have our upper resistance band of the predictive ranges that's falling right in the middle of the platinum pocket, and that's going to be coming in, oddly enough, right at 1820 to 1920, which is very similar to what you were saying on the 1800 to 1900 on where we could see some pullback on this. But as of right now, on the 12-hour, Ethereum did get the downtrend arrow, but I don't know. Again, it's 12 hours, so we still have room to move up here to get into our bearish zone on the oscillator, and the MACD is still looking strong. So not sure that this is actually going to get played out. Typically, we get some type of reaction to it, but right now, Ethereum's still looking strong. I do think that 1800, most likely about 1850, 1860 coming in on that upper resistance band there is what's going to do that. And also, Tim, if you look here, if you hit command and the plus sign, you can zoom in your stuff. And then go back, you just hit command and minus. So there you go.
Love it.
If you would have backed me up to 5 years ago, I barely knew how to operate a computer. So I got to take my wins.
Hey, I'm just trying to teach you some new stuff, Tim. That's all I'm trying to do.
He was working down in the coal mines.
Yeah. Pretty much. Yeah. But last thing, let's go back to my screen real quick, T-shirt, and then we're going to jump into the stock market. The other thing I forgot to mention here is moving to a macro Fibonacci levels to keep an eye on. We hadn't gotten anywhere close to significant levels here, but if you go back to the peak we had in November down to what is currently the bottom, the next level, another one calling for that 28,000, closer towards 30,000, is the 0.236 level. If we can break through, and if we do get above towards 30 and can hold, again, I want to see multiple daily candles, if not weekly candles, close above there. Start watching for a visit back up to 0.382 at 36, maybe even back up towards 50. This is something that people should be prepared for the rest of the year. We absolutely could have the bottom in right now and be revisiting 40,000, maybe even 50,000 back up to the golden pocket, but not necessarily see a new all-time high this year and still come back down. Like it would not be weird or crazy for us to rally even as high as the golden pocket, but then come back down even to retest the 0.236 around $30,000. And there's still a lot of emotional toll that people are going to be taking this year in both directions. There's going to be seasons where it seems like the bulls cannot be stopped, and there will be seasons where it feels like, oh no, here comes a brand new bottom. This is all a part of how markets move. The trick is to continue to watch things like this to help yourself get in the right mental state to prepare yourself for all the best dips and taking profits at all the best peaks. So with that said, again, we're 5 minutes past, almost 5 minutes past. T-Shroom, it has been a minute since we've gotten our market open on the stock market. Why don't you go ahead and take us away?
All right, let's do it. So looking over here, we're going to start per usual with energy. Energy coming in here pretty mixed. U.S. oil down pretty decidedly down 2.26% this morning. We're 4 minutes into the New York session, and natural gas is down 0.06. So let's keep moving down here. That's our energy story, which is pretty mixed, but oil is down significantly. Let's actually, before we leave this, let's take a look here because this has CPI implications for the next print. But we can also see here, we're going to get to some CPI drill-ins here, get into the details of that in just a second. But as you can see, testing the lower, wicking lower band of the Bollinger Band here. Again, this is WTI crude, the U.S. prices, and well below this major line of support that it's broken several times here at 67.20 cents. So that's the oil story, looking like it's pushing lower. Could put in it looks like it could put in a lower low here if the daily candle closes down here at 73.14, and that would be good for retail to buy oil cheaper, and good for CPI to bring the cost of the economy down. All right, looking at the indexes here, they're green. People are liking equities this morning. They're buying them up. It's interesting how that will be positioned in the media landscape as it tries to digest all of the chaos and the volatility right now. This could change. This could very easily change. Just kind of depends on the mood of the market. But as of now, the market's getting bought, and the NASDAQ is getting bought the most. So seeing a heavy rotation back into risk this morning here in the equities market. All right, looking at crypto, green across the freaking screen, guys. This is what we want to see in this point in the narrative here, in the economic narrative. You've just had, zooming out quite a bit. We don't. You just had, the FTX scandal. You've had a lot of uncertainty, a lot of doubt in the crypto market, and then the federal government, the Federal Reserve, seems to drop the ball. And this is how alternative currencies, this is how alternatives to the dollar are reacting. And of course, this one, Bitcoin being the chief, most significant here from an economic standpoint, up 7.6% here. As you're listening to the sound of my voice, breaking up above 26,000. So very impressive here, and Ethereum not too far behind, but Bitcoin definitely taking the cake. Optimism doing really well, up 6.6%. Let's see, some other notable ones would be Litecoin up 5.8%. So nothing red. You do see Tron not making much of a gain here, up only 1.6%, and then XRP up only 1.25% there. Let's move on, guys. We'll keep moving here. Okay, this is interesting. I was not expecting this. So the other major alternative to the United States dollar is gold, right? You've also got bonds, but you got gold here, and gold is not getting bought this morning. It's been on a run, so maybe it's taken a breather. Oh, it's been on quite a run. Goodness gracious. Let's see what the percentage gain is on this from the bottom here. So 5.6%. Doesn't sound like much to crypto traders, but this is quite a bit. If you're a conservative money manager, this is a good, really, really good move for this amount of time. This is only 4 bars, so just put that in perspective. This is not necessarily saying here that gold and silver are not still a buy, but it is. I mean, the RSI is saying that it's probably getting overbought here from just like a daily candlestick perspective, as it is outside of its top band of the Bollinger bands as well. So something to note there. This is interesting to see that gold and silver not getting bought at the same rate. Totally different folks, totally different trading psychology from gold and Bitcoin. So, and that is being reflected there in the morning percentage up or down. Big tech moving green. So that was kind of what we would expect there, but let's see which ones are doing the most. It would be Meta. You got to give it to Meta here in the morning, up 5.6%. Really impressive there. Tesla took a tumble yesterday, but is up more than 4% this morning. Let's keep moving here. Bond yields are making quite a comeback here, and the 2-year up 8%. Goodness gracious. These are the yields. So a lot of volatility, guys, in these markets. Make sure you are really being careful of what you're doing. Adjusting your stop loss strategy may not be the worst thing to keep in mind here, but this is a lot of volatility, guys, that I'm seeing. Cannabis green across the screen, and then your mid-cap market, your mid-cap tech stocks here are all pretty much green except for Snowflake and Coinbase coming in hot, up 10.6%. Let's take a look at that chart really quickly. Yeah, so looking really nice. It was able to gap up over its 200-day moving average on the daily charts to now settle around 65, 69. So looking good. Still has a ways to go before it taps that top band of the Bollinger Band, which it hasn't seen since February 3rd. So it's been a while since there's been real momentum here to the upside from a Bollinger Band standpoint. And it is still in red histograms since around that time, only 7 days after it left the upper band of the Bollinger Bands, did it go ahead and go into red histograms on the MACD and has not returned to green on that. Although we are getting a little bit of a bullish curl here on the MACD for Coinbase. All right. Well, that is going to round out. The only other thing I'd say is big oil. Oil producers green this morning, despite your oil coming in pretty low. So oil producers still anticipating, the market's still anticipating higher margin there for the oil producers. All right. Well, that's going to be your market pulse there as we kind of see what is happening here in the early minutes of the New York session for the stock market. Anything jump out at you there, Tim?
I mean, obviously the big one with the gold being down,
Yeah.
Very, very interesting watching gold be down, but everything else be up. But it makes sense because gold was up for a little bit there and everything else was down. So it's just kind of bringing everything back into balance. By no means do I think gold is done, but it is interesting to watch. And again, I'm really hoping as I'm watching Bitcoin be one of the leading assets out there, especially in the crypto space. I'm really hoping it's about time that people are waking up and realizing that we need to fix our money problem. And I'm not even saying that Bitcoin itself, like Satoshis, are what people are going to use for currency.
Yeah.
But if we could start the momentum of a Bitcoin-backed currency, it's not going to be interest rate hikes that fix our money problems. And the truth is, even though we can vote in politicians that might for a period of time pass some common sense laws with proper budgeting and help our financial system for a while, one of the downsides is there will be a day where they have to leave office. And people take good decision making for granted. They end up voting in other people. And it's just a cycle of like, there might be a season of responsibility and then a season of irresponsibility. That's why our money should not depend upon whoever is in office. Our money should be its own thing. And as long as we have the US dollar as our form of currency, that will never happen.
Yeah, absolutely. And I would characterize gold's movement today as taking a breather from the more than 5% to the upside movement that it's had over the last 4 candlesticks, I believe. So pretty impressive. Let's go back. Are we ready to get into
let's
our
get into
stories
some stories here?
Just so you guys know, this is technically the first day that Tim, I, and Army Piper have been are streaming together. So this is a monumental day. And you might say, well, you did it yesterday. Well, yes, but it was kind of an emergency meeting type of day. We had to bring on our ringer, Caleb Franson, to break down all this complex stuff. So now we have it right in our heads, and we can comment on it accurately. Well, let's go back to my screen then, and we'll go ahead and take one look. We Army already covered this, but I wanted to just go ahead and give you guys an update if you're just tuning in. The inflation rate year over year was forecasted to be 6.1. Okay, here you can see that, and it came in at 6%. So that is going to be bullish, right? That is a beat that's coming in lower than what the economists were forecasting. That is good. That is also going to potentially give Jerome Powell an impetus to do less hiking, right? And have the interest rates elevated for less amount of time. And those are both things that we want. Core inflation did something similar. The forecast was 5.6, came in 5.5. So those are both the very important numbers, and they came in a bullish way. So that's what you want to see. All right, moving along. Let's go ahead and get into some of the stories here. Senator Elizabeth Warren, maybe you've heard of her, calls for Powell's recusal from Fed's bank failure investigation. And this was one that I want to toss over to Army Piper and to Tim to get their views, because this is kind of interesting, kind of controversial. Sometimes we agree with the senator, Elizabeth Warren, and sometimes we disagree with her. I'm serious about that. There's been times where she said things and it's like, she's not wrong about that. All right, so here we go. Okay. Fed Chair Powell's actions directly contributed to these bank failures. For the Fed's inquiry to have any credibility, Powell must recuse himself from this internal review. It's appropriate for the vice chair for supervision, Barr, to have the independence necessary to do his job. So, Piper, what do you think about this? Do you think that Jerome Powell, with his money printer, needs to set it down for this meeting and go ahead and recuse himself and take a step back?
No, I don't think so. I think that he's actually the only one that's actually done anything and taken responsibility for what we've gotten into at the Fed. So I think Elizabeth Warren needs to step back, quit pointing fingers and throwing rocks in her glass house, because at the end of the day, the whole reason we got into this is her and her peers to her left and right that decided to just hand out money like it was growing on trees during the that thing that happened in 2020. So, yeah. So, no, I think she wants to do a whole lot of mudslinging and cause drama and get votes and get attention, and I think it's all ill-placed. I think at the end of the day, Jerome Powell is the one that has fixed their mistakes. So.
Gotcha. Tim?
No, it's kind of even echoing and picking up where Army Piper left off. This is the idiocy of the reasoning that a lot of people are using by saying that the reason these banks crashed was because of the policy by Jerome Powell and the Fed. Jerome Powell didn't tell them to over leverage themselves. Jerome Powell didn't force them to go in and do terrible budgeting of their money. Jerome Powell didn't enforce and didn't create the bills and the laws that the U.S. government is using to be irresponsible with money. His job is to try to fix their mistake. The reason why he will not be able to do his job is because it doesn't matter how much he raises interest rates. It's this concept. I was talking with some people yesterday. I think it was with the UT Shroom. But, let's take the example of like a spoiled girl.
Sure.
And she gets money from her dad. And her dad just always wants to make sure she has enough. He's not trying to spoil her, but he just wants to make sure she's always taken care of. Well, on Monday, he gives her $100 and she goes out and uses $100.
Mm-hmm.
Well, he thought, okay, let me use more money. So on Tuesday, he gives her $200. She's not going to just spend $100. She just got $200. She's a spoiled little girl. She's going to go spend $200.
Yeah. And
on Wednesday, when he gives her $300, she's going to spend $300. She doesn't know how to. The problem is that she doesn't know how to budget. She doesn't know how to actually handle money correctly. But the dad keeps thinking, well, if I just raise what she can use, maybe she won't run out of money so quickly. And it's like, no, she will always find a way to spend her money. Same thing with U.S. government. The fact they can choose when they want to spend money, however they want to spend money, up to the cap, and then they look at the Fed and say, oh, we use all our money. Can you print more of it? Okay, yeah, I guess we'll print some more money. We don't want you to run out of money and have a bad life. Let's print more. And now the Fed, like a dad, is saying, all right, we're going to crack down. I'm not giving you – I know you got used to spending $500 a day, but I'm not giving you $500 a day anymore.
Yeah.
And it's not his fault that she's bad with money unless – I mean, you can make – the analogy's falling apart. He could teach her better lessons. Yesterday was a better analogy show. My point is, just like that, the government's problem is not the Fed. The bank's problem is not the Fed. They're not the ones that made the choices. You can make the argument they enabled the choices, but they didn't make the choices.
Sure.
The bank made a terrible decision. The government's making terrible decisions. And at some point, you have to sleep in the bed you make.
Yeah. Well, so you guys have some folks agreeing with you here on Twitter. Piper, if you go back to my screen, Echo to All said, Warren should resign. She tried to bring down the crypto banks, SI and SBNY, networks SEN and Signet, triggering regional bank runs as a residual effect. She's intellectually incapable of handling her responsibilities, and you've got a nice gif of a meme of a clown looking into the mirror there.
All right, clown.
Well, let's move over to this poll that I put up this last night. I said, they say buy when there's blood in the streets. Is the bleeding over, or has it just begun? 69% said only begun. So you guys can go ahead and find my Twitter there at tshroom. You're going to love it. All the tweets there are super, super cool. Norma calls for rate cut at next FOMC meeting, end of QT. This is a significant one because last June, Nomura Bank, was the first bank to call for 75 basis point rate hike. So they got it right there. Let's see what they're saying now, which is after Goldman broke the seal last night when it said it expects an FOMC pause in March, Nomura's important rep here decided he has to do what he has done so many times before and quickly published the most controversial Fed forecast yet, going from 50 basis points to negative 25 basis points at the next FOMC meeting, thus becoming the first on Wall Street to call for a cut to Fed rates at the next FOMC meeting. So they are an accredited, considered legitimate, one of the big banks right here, or at least Wall Street banks, and they are the first to call for a cut in March. Is it going to happen? Who knows? But Goldman, they're not far behind, saying that March is going to be when could be when the Fed pauses. So very interesting there. I mean, I don't know that there's too much to discuss. I mean, we could just kind of throw our hats in what we think, but I think moving to the next story is probably more advantageous.
I think the only thing I'll say,
go ahead,
with Caleb yesterday, those who watched it, Caleb made a good point. It's going to be very interesting to watch what Jerome Powell's response at the FOMC meeting is, because what Caleb is saying is that Jerome and the Fed, they knew this was going to happen. They understood the risk of interest rates, but what they were weighing out, because it's not like, Jerome Powell gets no pleasure and joy from the news when banks crash and companies crash and people lose their jobs. That's not like giving him kicks and giggles when he gets home every night.
Sure.
But what he's looking at, do I just keep inflating the dollar and keep banks in business, but every single individual is getting their money stolen from them on a daily basis? or do I finally fix inflation? And he has said in the past he's choosing to fix inflation and get it back down to 2%. And he understands that means people are going to lose their jobs. That means banks are going to have some problems. And so Caleb makes a good point there. But could the pressure, he's getting the pressure from Wall Street is what you just reported. He's getting the pressure from the government. He's getting the pressure from all these places. Does Jerome Powell break and go easy and say, you know what, fine, yeah, we're going to lower interest rates to help out the economy? Does he become like that father who enables his daughter to keep, or I don't know why I said daughter or son, both can be spoiled.
Yeah.
Does he enable his child to continue to be irresponsible with money?
Yeah.
It's going to be a very interesting FOMC meeting.
Yeah. Well, for those of you who are new to the channel, there is an indicator that quantifies that exact question. If you'll go to my screen, it is now 86% predictive from the futures tool here that we will have a 25 basis point hike. So not quite what Nomura is forecasting there, and I'll go ahead and give it a refresh here, but it is definitely not what the market was thinking just a week ago. So let's go ahead and dive in here to our next story, and that is going to be, according to a recent speech by the FDIC, Chairman Martin Grudenberg, banks under his purview have accumulated $620 billion in unrealized losses on investment securities as the fourth quarter due to elevated market interest rates. The elevated level of unrealized losses is at risk of becoming realized if the banks need to sell securities to meet liquidity needs. And this is exactly what has happened to Silicon Valley Bank. They, got in over their head and the market took a turn for the worse. They were I wouldn't say over leveraged, but they were mismanaging their investments, not being conservative enough, and now they are getting taken.
That's over leveraged.
Taken to task. Well, yeah, it's over leveraged, but I don't know exactly if that's the correct term. All right, moving on into our final story here. Judges will likely rule in favor of Grayscale in Bitcoin spot ETF battle with SEC, says Bloomberg expert. So who's that Bloomberg expert? Well, it's none other than Bloomberg Intelligence editor Elliot Stein. So he said, Grayscale mainly argued that the SEC is inconsistent in applying its standards after approving Bitcoin futures ETF while denying spot Bitcoin ETFs. So the SEC countered by saying that unlike its futures counterparts, a spot Bitcoin ETF is not regulated, and therefore the regulator cannot be sure that there's no fraud or manipulation in the underlying market. BS is what Grayscale's attorneys are calling on that. And here is kind of how here's kind of how some events and the judge's reaction went to these arguments. So as summarized or as quoted by Stein here from Bloomberg. So the SEC's arguments that even though there's a 99% correlation between the prices in the spot market and the futures market, they're not convinced that fraud in the spot market would show up the same way in the futures market. They never really clarify what that meant, but they said Grayscale needs to provide more empirical evidence of how fraud in the spot market might manifest in the futures market. The judges pushed back on that question quite a bit and said, why do they have to show that? Why is it not enough for the prices are correlated so extensively? And in addition to that, what type of empirical evidence do they need to show? And the SEC did not give a satisfactory answer for that, in my opinion, the opinion there of Stein from Bloomberg. And then this was Stein's kind of final conclusion here. He said, coming out of that argument, I think Grayscale is favored now. I give it a 70% chance to win a ruling from the court that vacates SEC's orders rejecting their application. So that would be extremely bullish. Guys, in the last bull run, one of the main fundamental stories that was leading Bitcoin higher and other cryptos higher was that there would be a Bitcoin spot ETF. Now, at the time, the market, I would say Crypto Street, right, or Bit Street, meaning people who are involved in crypto, not necessarily Wall Street. Bit Street was definitely uneducated on the difference between an ETF, a spot ETF, and a futures ETF. Well, now that everybody knows about that. And if you don't, you can look it up. But basically, they're different, right? And what Bit Street concluded is that we want a spot ETF. A spot ETF would be really, really good. It would be very bullish, and it would essentially give custodians of money money manager custodians, people managing your parents' 401ks or your 401ks, the ability to invest in Bitcoin, which is something they do not have fiduciary clearance to do right now per the U.S. SEC regulation. So this would change that, guys. And it's a 70% likelihood that we could see. I would translate this as a 70% likelihood that we could see a spot ETF by the end of 2023. I don't know if Grayscale is the best host of that at this point, but there it is. What do you guys think of that? Do you think that this is going to be extremely bullish here? And then once we get a quick answer from the both of you, we'll get into my cruise picks.
Yeah, I mean, this is bullish for multiple reasons. One, as you mentioned, that was a big narrative. I remember when I was coming in, that was a huge storyline and people were talking about what this would mean. But of course, the SEC blocked it. So that would be huge for that reason. Also, it's huge because this is just another L that the SEC has taken within the last 2 weeks. They cannot get anything right. They're losing on all fronts. Gary Gensler, he's going to continue to try to be relevant, but these last 2 weeks and what judges are doing and knocking down what he's trying to get to go forward has been a very beautiful sight and gives you hope that crypto isn't screwed. Despite the fact that there's so many bad players who are fighting against the adoption of cryptocurrency, at this point, judges are still ruling in the favor of crypto, and that's a nice thing to see.
Yeah, Piper?
So I think Gary Gensler needs to recluse himself. I'll start off with that. I think that this ETF is very bullish, the spot ETF. For one thing, it's going to open up access to trillions of dollars in retirement funds that can actually get into that ETF. Are they all going to go into it? No. But are we going to have the opportunity to see at least a small percentage? Absolutely. And a small percentage of the total retirement funds that are available out there that can get into this ETF is an astronomical number in comparison to what is currently in Bitcoin. So, yeah,
absolutely.
Huge bullishness.
All right, Piper. Well, it is now time. We've gotten through our market open. We've gotten through some TA, and we've gotten through the stories. So now it's time for the dessert here. And this
we didn't get 100 likes. So here's the real question.
Oh, are we? I thought
we said 100 likes.
I didn't know that.
And do we spoil our viewers and give them the pictures anyway? Or
do we hold out?
Do we hold off and say, you got to get the 100 likes to get those pictures? What do you think, Piper? What do you think we should do?
We should do pictures.
Do the pictures.
Okay, so we now know that Piper spoils his children.
Yeah.
No, this isn't for the children. This is for my bro T-Shroom because he had such a blast and he wants to show how much fun.
I know. We'll do it. We'll do this. We'll show you the pictures in good faith that you guys are going to get us up to 100 likes.
Yeah, 97.
97. There we go.
By the end of the
they're
pictures,
getting there.
I trust that we'll be there.
All
right. Yeah. Okay. So going over to my screen now, Piper. So you can see the lovely, the beautiful Amanda Miller there. That my girlfriend who we got to go on this cruise, and you can see there we are at the back of the boat. This was called the Windjammer, where there is a nearly 24-hour buffet, and you can see there on my screen, on my plate, I should say, I had some chicken. I had some green beans. I had some. This was a roasted pumpkin fry, essentially. So they're making fries out of pumpkins now, at least over at Royal Caribbean. Well, let's move on to the next picture here. And this is your boy we saw at the top of the hour, ready to feast, ready to dig in and get those calories inside. Moving along, you get a nice, lovely sunset picture. This was very popular to do on the cruise, to get some pictures of the nice sunset and the ocean there. We were in the Gulf of Mexico when that was taken. And this was ABBA. This was the entertainment that was on the ship. For those of you who don't know, who haven't cruised before, there are live shows almost every single night. There was a comedian, and there were dancers and singers. And this was a moment where they were doing a rendition of ABBA. And I absolutely love ABBA, huge ABBA fan. I don't think music has really progressed since ABBA. You know, you've gotten Adele, which kind of has put a dent in it. All right, moving along. And then these were the cruise ships. Ours was this one over here, Brilliance of the Sea. And that was really, really great. Had a lot of fun. This was a chilada that I had on the beach of Cozumel, Mexico. The best chilada I think I've ever had. It was really, really delicious. This was a toilet. And I'll move away from that one quickly. But that one was a toilet with no toilet seat. And that was in the only gas station in all of Cozumel, and there was no toilet in the main stall of the men's bathroom. I found that very interesting. That I guess they're not big fans of toilet seats over there. All right, well, this is a beautiful view from a seaside bar there in Cozumel, Mexico, making up for the lack of toilet seats there. And then here are some of the friendly faces that accompanied me, and my lovely girlfriend there with her Miller High Life hat. She's definitely not a fan of beer, but she loves the hat because her last name is that. So you can see the cruise ship there in the background as well. A great picture, if I do say so myself. One last picture of us on the sunset. And then we get to the utter reality here that Piper can relate to, which is back after my cruise. So in between the cruise and now, I had a U.S. Army drill for the National Guard of Florida, and it was grueling. There was a lot of low crawling. There was a lot of sprinting. There was a lot of sweating out in the Florida heat. And you can leave my screen now, Piper, because that was the last picture. But guys, you earned it. We got up to 106 likes, and I'm so proud of you guys. You killed it.
Yeah.
But I want to point out that there was not any learning how to properly square the corners of your sheets in that weekend T-shirt.
Correct. Yeah. Well, we haven't been taught that yet. And what we haven't been taught, we can't be smoked for. So there we go.
First thing of discipline, make your bed in the morning with the square corners and bounce a quarter off of it.
Well, it's a fitted sheet, though. Can you even square a corner with a fitted sheet?
You shouldn't have a fitted sheet. What is that?
Well,
officer privilege?
Yeah, it is. That's what they issued us from Amazon. They sent us an Amazon link and they said, buy this.
Well, that's what the military's going weak. You heard it here first.
And that is why I am retiring this Friday.
It started with the fitted sheets.
Oh, gosh. Well, that is all we have for you guys today. I hope you enjoyed the show. Thank you to everyone still sticking around here. If you have not, go ahead and smash that like button on the way out and subscribe to the channel. And like that one just said, also, in case you haven't done it and you ever miss our content, hit that notification bell. It is essential. Look forward to a video coming out today or tomorrow. I'm going to be doing over on Sharp Prime's channel about this macro outlook. Go show it some love and support. With that said, though, guys, we love every single one of you, and we will be back tomorrow. You guys have a great day.